Good afternoon, everybody.
Good afternoon, sir.
Good
Good
afternoon, sir.
afternoon.
Thank you
Good
very much.
afternoon, sir.
So, I'm Rasul Taiwo, and we'll be working together on financial regulation in the next 2 hours by God's grace. So, I want you to help me with something by asking questions. That will enable us to cover a lot of things when you are asking questions. It could be on the chat. You might be typing question there. Then, secondly, by responding to some of our prompts. So that's the main thing. So before we start, I want to thank especially Mr. Jamil for his efforts. We are busy during this time, December. All accounts are always very busy. So, but thank you, Mr. Jamil, for this opportunity. He kept calling me every day, sometimes 3 times in a day. Thank you very much.
Mr.
I also
Rasul,
give.
we can't hear you.
Oh, sorry about that. Hello. Good afternoon, everyone.
Good afternoon,
Is
sir.
it
Good
better?
afternoon, sir.
Is it better now?
It's better now.
Yes,
Yes, it's
Yes.
Oh,
better.
okay,
better.
okay, okay. I'm sorry about that. I said I want to thank Mr. Jamil especially for all his efforts. We've been talking
Better, yeah.
every day. And I also want to thank Mr. Olaegbe. I want to thank everyone for this opportunity. And I also say that I want us to be active online while the session is going on by asking questions and by responding to questions. Those are the things I said earlier on. So while Mr. Jamil is helping us to put the to share the slide, I want us to start doing something because of time. Because normally Zoom will be counting time. So I don't know the package we're using, but I'm sure it will be doing countdown for us. So that will be using every minute,
Yes.
utilizing the time well. That's why I say we should start something first. So once again, my name is Rasul Taiwo. I'm Rasul Taiwo, okay? So we'll be looking at three aspects. The session is divided into three. The first aspect is financial responsibilities. Financial responsibilities. The second one is financial control. And the third one is financial management. I want to explain these three aspects. What do we mean by financial responsibility? Financial responsibility simply means the aspect of our schedule of duties that have financial implications. It therefore means that every single officer has a schedule that has financial implication, even a driver, even a cleaner. For example, by virtue of our rules and regulation, by virtue of financial regulation and public service rule, if a driver of a permanent secretary, for example, a driver of a permanent secretary got an accident with the official vehicle is handling, the driver supposed to tell his supervisor first and then the director of admin before going to the permanent secretary. So that is a normal protocol. So this means that the accident has financial implication for the government and sometimes to the driver himself. So, so if a driver could have financial responsibility, if a cleaner could have financial responsibilities, it therefore means that everybody down the line, from top to bottom, across the service, everybody have financial responsibilities. So that is what that area is talking about. The second aspect is financial control. This one has to do with how government is monitoring and safeguarding its assets. The asset goes beyond money. Apart from money, there are also other assets like vehicles, like furnitures, like government quarters, staff quarters, and so many others. Okay. The last aspect is financial management. All this I'm saying, we see it on the slide when it comes up. Okay. The last aspect is financial management. Okay. So that is that. Um, so we all know the meaning of financial regulations. It is a set of guidelines, a set of rules, procedures. It is published by the Minister of Finance at the federal level for states and federal government public service. That is federal public service and state public service, okay? And the purposes is to safeguard government assets, to protect public officers, that is public servants. So before moving, I want to quickly say that when we say public servants, it connotes civil servants and any other person that are engaged by the government in capacity of employee. So that is that. So I'm talking about the benefits of financial regulation. It is the same thing as the benefit of public service rule, okay? To guide officer, to protect officers in carrying out their official transactions, to set standard operating procedure of the government, okay? And then to secure government assets, to spell out penalties, offenses. Without financial regulations, we may not know what constitutes offenses sometimes. It's financial regulation that points to some things, some acts as offenses, and it also spell out the corresponding sanctions or penalty for such activities. So I want to quickly ask, who can tell us the challenges of financial regulations in our day-to-day activities? What do you consider are the challenges of financial regulations? Can somebody quickly help us? Hello? You can respond on our group chat, on the chat of the Zoom chat. What are the challenges of financial regulation? Hello, are we there?
Please unmute if you want to answer any question.
Okay. They can, okay. Okay, let me quickly move on. We still have a long way to go, okay? It is as if when we get to interview, they now ask you, what do you think are the challenges of public service rule? What do you think are the problems of public service rule? Okay, this kind of question is strategic question. The reason why I say strategic question is that it is not possible for government to make rules and tell you that those rules are problem. It's difficult for government to make rules and say there are challenges in applying these rules. It is a thinking question. It's something that we think about, okay? So, therefore, some of the challenges of financial regulation and even public service rule is rigidity, rigid, that is non-flexible, rigidity. The financial regulation and public service will want you to do something by any means. Just do it this way. For example, you apply for conference, 700,000. You want to go for CIPM conference in Abuja, for example. And at the end, when the money now comes, the following, the budget of 2025 would have been prepared in 2024. So when the approval came and you collected the money is not sufficient for you to go to Abuja for the conference again because of inflation. But financial regulation wants you to go to that Abuja by force, or you return the money. So it is rigid, it is not flexible. You can't say, I want to manage, I want to enter train. You now bring the receipt of train into the voucher that says you should take flights. So that's one of the major challenges. That's the major challenges of financial regulation, rigidity. Number two, it doesn't allow us to use our personal description. It does not allow us to just
Mr. Jamiu, are you there?
Yes, ma'am.
We can't hear Mr. Rasul again.
Oh, sorry about that, and I've been talking. I'm sorry about that. So we're talking about the problems, the challenges of either public service or financial regulation, or any regulation for that matter. They are similar. One is rigidity, one is it discourages innovation, or it discourages us from using our discretions. We do not use our discretion when we are operating in a regulated environment. So, for example, you have ₦1,000,000 cash today, and there's long holiday from tomorrow, and there's no safe place for you to keep. You have access, government bank account. You cannot keep it there. It is safe there. But once you keep your money inside government bank account, according to financial regulation, it will be presumed that you do it with criminal intention. That is the word of financial regulation. Anybody that does that, do it with criminal intent. You don't have good faith. You have another agenda. Can you imagine that? That's the word of financial regulation. Let me give you another one. If you go to chapter 1 of financial regulation, section 2 of chapter 1, it states that a political head, if a political head give you directives, tell the person to put it in writing before you obey it. What we mean is that if a commissioner tell an account staff that is controlling money to go and bring money, even the head of accounts say, oh yeah, go and do this for me, go and pay that supplier, go and do that. You tell the commissioner or minister to put it in writing and sign. So you see that these things are somehow difficult, and especially when that officer still has a senior colleague, still a head of accounts that the person is working under him or her. So it doesn't allow, maybe the Oga has given the standing instruction that whenever a commissioner calls you, please do it for him, do it. But it does not protect the officer from doing so. In fact, going further under that chapter 1, that part of he said that any directive or a political head that you implement that is against the regulation, you are doing it at your own personal detriment. So there are a lot of challenges. Another problem with financial regulation and public service rule is that it requires regular amendments. The latest version of financial regulation was in 2009. 2009 to this side is 15 years, or 16 years. 16 years ago, around February 2009. That was the last time they revised financial regulation. Just imagine a guideline, a rule, a law of 2009 is what we're still using in 2025. So, the process to amend financial regulation, the process to amend public service is tedious, is rigorous. So those are the challenges. So as I said earlier on, there are strategic questions. There are some questions in the interview that we need to quickly think about. How do we survive this kind of question? Is that you do a lot of discussion before the interview. You do discussion, you do case studies, as in this kind of session, that you ask any question, think of something and ask about it, then we discuss it, we think about it together, we discuss about it. So what's the solution to that area? If it is difficult to amend public service rule, it's difficult to amend financial regulation, it takes a long time to do that. So how do they do it? How are we coping? They use circulars. The circular from the Office of Accountant General is called Treasury Circular, because the Office of Accountant General is also called State Treasury Office, or Treasury, State Treasury Office, or just simply Treasury. That's another name for the Office of Accountant General. Remember, the Office of Accountant General is like a parastatal on its own. I did not say it's a parastatal, but it is very, very similar to a parastatal on its own. So if I now tell you I'm working in Office of Accountant General, it does not mean that we see every day. It's not mean that we're in the same office. It means I'm representing Accountant General somewhere in the service, because the Accountant General cannot be everywhere. They have to deploy officers. The head of service cannot be everywhere. They have to be accounting officers. The head of service cannot be everywhere. There has to be director of admin to be deployed to represent him or her in those places, performing the same function or similar function. Okay, let us leave that one. But let me quickly say in that regard that if we go to the Office of Accountant General, there are some directorates, between 7 and 10 directorates there. The core ones that we have about 6, those are the things, replication of them are what you have in your MDA. So in each MDA, the finance and account department has some section. There are some sections. Those sections are replica of each directorate under the Office of Accountant General. Let us leave that one. Let's quickly move forward. I don't know if Mr. Jami has been able to share that in it. It will be easier for me if we have it on our screen. Okay. Hello, sir.
I'm still on it.
Okay, maybe we should just share it on the group for those who want to be looking at it.
Okay.
Is it
on the group?
No, it's in your WhatsApp. It's in your WhatsApp page. I send it to you personally. You now send it to our group, that tutorial group, so that anybody that's interested in following it that way. So let's move on. So the next one is financial authorities. I deliberately start from this area so that we'll be moving up as we progress, okay? Financial authorities are just documents. Sometimes we call them legal instruments that guide public officers in carrying out their official transactions. For example, Treasury circular. Another example is financial regulation. Another example is approved budget. So they can say, why did you release 900,000 as for CIPM conference or NIM conference? We say it is according to the budget because the budget is a law. That means the budget is an authority, and it talks about money is a financial authority. So there are several financial authorities. We have it on that slide. The 1999 Constitution, the annual appropriation law. Let me quickly say that when we say law, we're talking about state government. When we say act, we're talking about federal government. So when we say appropriation law, we're talking about approved budget of the state government. Appropriation Act is approved budget of the federal government. Others are procurement law, government official gazette, Fiscal Responsibility Act, Public Finance Management Law, PFM law of Lagos State, the Finance Act of the federal government. All those laws and guidelines, they are financial authorities. When they talk about money matters, they are financial authorities, okay? So that is that. Sorry, I think I have some messages here. Oh, thank you. Some people are responding to the question I asked. Miss Olushola Shakirat Elegbeleye. Thank you, ma, for that. Miss Deborah Adako, thank you. Okay. Miss Ajayi Oluwakemi Mojisola, thank you. She mentioned rigid. Mr. Tayo Idris mentioned complexity. Thank you for that. Complexity is one of it because, sincerely, anybody, when you open public service or financial, you get bored immediately. What's the meaning of all this worry that these people put together? It's a boring document. It's a complex document. It's not easy to interpret. We need experience and knowledge to interpret it. Let me give you an example. In any MDA, when you look at them, after the accounting officer, when it comes to managing the organization, after the accounting officer, it should be head of admin. When it comes to keeping record, managing personnel, managing people, it is the head of admin. But when you look at financial regulation, it will say the head of the organization is accounting officer. When it comes to money, you will now say the next person is sub-accounting officer. So who is sub-accounting officer? You now be thinking that it should be head of admin. But when they now start describing, they will not say head of accounting. They start describing the functions, the duties, the responsibility, the office, the qualification. You will now know that it's the head of account they are talking about. So complexity is one of the challenges. Thank you for that. Okay. We have okay, Missy Tunugbe Misola. Thank you for that, ma. That is a thank you for that. Okay. Now, as we move on, let's quickly look at further on financial responsibilities. Under financial responsibilities, we say all officers from cleaners, drivers to the topmost person in that MDA. Everybody has financial responsibilities. Anybody who tell you that he or she does not have financial responsibility, ask about the schedule of duty. Okay, you are a storekeeper. The items you keep, okay, then let me go there. Let me go to chapter 21 of financial regulation. Under chapter 21 of financial regulation, it clearly states that every single officer is responsible for the security and safety of all the assets in your office. Everything, even the dustbin, the bin in your office, if it's missed, you will be personally responsible for it. And that will cost money. It can lead to surcharge. Most times it's surcharge. Surcharge is deduction from person's salary. And therefore, it means that everybody has financial responsibility. But according to financial regulations, there are some officers that have very important, very critical responsibilities. The first one mentioned is Accountant General. The next one mentioned is Auditor General. These two officers are officers of concurrent power. They have equivalent. No one is senior to the other. No one is superior to the other. Because if you look at our law, like the Constitution, like other there are financial laws, including financial regulation, Treasury circular, you will notice that Auditor General has the power to ask Account General to bring his document. Bring your document, let me see it. Explain to me, why do you do this? It doesn't mean that the Account General is subject to the Auditor General. No. They have concurrent jurisdiction. Okay? Therefore, they have separate line of responsibility that we're going to talk about now. Those two offices are specifically created by the Constitution. It is important that we have that in mind. People don't know. Because the Auditor General is a permanent secretary, just compare them with any permanent secretary. Because the Accountant General is a permanent secretary, in our own mind, we just say it's PS. The offices are specially created by the Constitution of Federal Republic of Nigeria. It's a unique one. So their statutory office, that one is important, that we always put it in mind. So their powers, their responsibility, their appointment, their removal are clearly stated there. So whatever the head of account is doing is just a replication, not duplication, a replication of what the account general is doing over there. According to account general is expected to pay money, receive money, account for the money, prepare cash book, prepare submit accounts, and attend to queries. But it cannot be everywhere. That is what the sub-accounting officer is doing. But let me restart that area again. We say that under financial responsibilities, we have Accountant General, we have Auditor General, we have accounting officers, we have sub-accounting officers, we have revenue collector, we have impress holder, we have officer controlling the expenditure, and we also have others like the procurement officer, the planners, and all other officers. Before I move, I want to be sure that we're together. Hello, are we there, everyone? Hello?
Yes, we are with you.
Oh, thank you very much. Okay, I want to be
Yes,
sure
sir,
that
you are
I'm not
there.
alone. Thank you,
We're
thank you
here
very
with
much.
you.
Okay, therefore, what
Okay,
does
okay.
Accountant General
All
do
that
in an interview? If they ask me, what are the duties of Accountant General, I'll mention two duties of Accountant General. That duties that Accountant General is performing is the same duty that your head of account is doing. It's the same duty that the person that had the account of your private business, the private business you have outside, the person you put in charge of that money, what you expect the person to be doing is what the Accountant General is doing for the government. It is the same thing that the head of finance and account in your MDA, they are doing the same work. For example, they prepare accounts, they prepare financial statements, or just say they prepare government accounts or account of the MD if he's the accounting officer, a sub-accounting officer. They prepare account. Two, they render returns, their financial reports that they submit. Okay? They receive government revenue and account for the revenue. They pay money on behalf of the government. They make payments. The person you put in charge of money in your private business, those are the things they do. They manage public debts. They manage government investments. So let me say it again. If they ask us, what are the duties of sub-accounting officer, that is the head of account, or what are the duties of accountant general, just think about what you want your accountant to do for you. We don't need to cram anything. The same thing, when they ask us about the duties of auditor general, this is similar to what auditors in the private sector will do. This is similar to what auditors in your MDA will do. What did they do? They review financial statement. That is, they go through the accounts. Then they write reports on the accounts. They conduct investigation if there is need. There could be need for investigation. They do investigation. They issue query. They request for information and explanations. Then they present their report. The Auditor General present audited account audit report to the House of Assembly. Why do we do that? In any private company, maybe you have shares in First Bank, you will be one of the person that will appoint auditor. Then when the auditor audit the accounts, they will submit the report to annual general meeting, the owners of the company. So when Auditor General audit accounts, they submit to the people in the society. But the people in the society cannot gather together in a hall. So the House of Assembly, they are representative of the masses. That is why the Auditor General will present the report, audit report, to the House of Assembly. Please remember, all members of the House of Assembly may not need to see the report. They will look for people who have idea about accounting and finance and economics. They call them PAC, Public Accounts Committee. They call them PAC, Public Account Committee, and then they send the report to the PAC. That is, Auditor General presents audit report to the Public Account Committee, PAC. So that is that. This Public Account Committee, what is it about? This PAC that all of everyone here must have been there before. Almost everybody here. What is this PAC? It is a standing committee of the House of Assembly. Why do they call it standing committee? There are two categories of committee in the House of Assembly. We have ad hoc, that's temporary, ad hoc committee. Then we now have standing committee. Standing committee simply means a committee that will continue regardless of who win the next election or not. The committee will stand. It's a permanent committee. They call them standing committee. So it's a standing committee of the House of Assembly that review the report of the Auditor General and summon the accounting officers and all other concerned officers and issue query. They also have power to conduct investigation. They have just about 5 major functions. They attend to the report of Auditor General, they summon accounting officer, they issue query, they request for information and explanation, they conduct investigation if it is necessary. So that is that. Now we have seen what Auditor General does and what Account General do. Okay, that is that. The next one is accounting officer. We all know that the overall head of the MDA is called accounting officer. That is a language of financial regulation. It is also the same language of public service rule. But in practice, in reality, the title, nomenclature, the designation of the head of an organization, a government organization, will depend on the enabling law, will depend on the establishing law. It will depend on the law that creates that MDA. Don't forget, sirs and mans, don't forget that ministries, majority of our ministries, they have been created from the beginning. Some of them are mentioned in Nigerian Constitution. The Ministry of Finance, the Ministry of Education, the Ministry of Agriculture, those ones are specifically mentioned in the Constitution. So Constitution is the enabling law for that. The Civil Service Commission, it was specifically mentioned in the Constitution. Office of Auditor General, Office of Head of Service, Office of Account General, all those are specifically mentioned in the Constitution. Office of Attorney General. But majority of the agencies are created by law. Majority of administrative departments are created by law. It is those laws that we mention they are tied to. For example, a law created Health Service Commission, and the law said the head will be a permanent secretary. The law created that law, that public, the law create. Hello, are we together, please?
Yes, sir.
Okay,
Yes,
law created
we are
government
together.
hospitals And government hospitals, their accounting officer and medical director. It is because the law called them like that. But financial regulation call all of them accounting officer. So the overall head. So the overall of any overall head of any organization, what would be the duties now? To manage the 4 M's of management, the 5 M's, sorry. Men, money, material, machine, and the methodologies. Men, money, that is human resources, financial resources, the logistics, and the regulations, the system. The person in charge of those things, because if you look at chapter 1, financial regulation, under part 1 of chapter 1, it said that accounting officer is the permanent secretary of a ministry or the head of an extra-ministerial entity. Extra-ministerial entity. So that is to say, all government establishments are either ministry or extra-ministerial entity. Under extra-ministerial entity, we now have extra-ministerial department like LASIEC, those that report to the governor directly, like the DSS, and so on and so forth. Okay, that's extra-ministerial department. Apart from that, we now have agencies, we have parastatals, we have commissions, we have institutions like Rasul, we have corporations like printing corporation, water corporation, and so on and so forth. Those ones, they have specific designation by their enabling law. So what are their general functions? See, submission of the budget of the agency, preparation of the budget is the responsibility. Although it could be the budget officer and the accountant that will do the budget too, but the law assumes that it is the overall head that will prepare it because it's going to give them directive. To prepare and submit accounts of the MDA is the responsibility of accounting officer. That's the assumption of the law. Although in reality, it will be the head of account that will do that. To make sure that rules and regulations are followed, that is, compliance with financial regulation and public service rules and all other extant law or extant regulations. And so, those are the responsibilities of accounting officers. So, that is accounting officer. So the next one will now be sub-accounting officer. We have said that generally speaking, sub-accounting officers are the heads of finance and account, generally speaking. Although there are some others that are not heads of account, they are also sub-accounting officer. Let me give examples. In the public service, there are a lot of projects that people don't know about. There are a lot of World Bank projects, DFID projects, UK, USAID projects, and so on, European Union projects that look like organization on their own. They are projects, but they run them like an organization because they need accountants, they need admin officer, they need project coordinator. They have their own budget, they have their own money, they have their own bank account, they have their check, they have their voucher. So they are like an MDA on their own, but they are not MDA. So the accountant of that, we have the status of a sub-accounting officer. The project coordinator, we have the status in the eye of the law. They will have status of accounting officer. The admin person, administrator of that project, we have the status of head of admin in the eye of the law. So it may not be the physical organization. It could be a project or program. Let me quickly remind us of that area. That anytime we say project, program is not a mistake. We're using those words deliberately, not interchangeably. Remember that project is physical in nature. It has physical substance. It is tangible in nature, like construction of schools, construction of road, number of classrooms, number of books bought, number of generators. They are projects. Programs are intangible. They lack physical substance. They are qualitative in nature, while projects are quantitative. And therefore, we say that the result of a project will be output. I mean to say that the final result of a project is output. It is measurable in quantity. While the result of programs is outcome. They are measurable in quality, like how many malaria patients have we, what is the morale of employees, what is the pass rate of students. Those things are qualitative. They are not quantitative. Okay, let's quickly move on. We've mentioned accountant general, auditor general, accounting officer, sub-accounting officer, now revenue collector. So we may not see officers that is collecting money physically, but somebody in the finance and account department is a revenue collector. The person is a revenue officer. For examples, in hospitals, they use consultants to collect money. Yet, there's still an account staff that's a revenue collector that monitor that system and work with them. The same thing applies to all MDAs. The duty is to collect and account for money, to collect the inflow of money, to monitor inflow and account for it. Take responsibility in accounting, and the person have to prepare cash book. The next one is impress holder. This is the officer in charge of disbursement of small amount of money, like petty expenses. In the private sector, they call them petty cashier. So the person that disburses our impress, that manages our impress, is the impress holder. The person also needs to prepare cash book. The last one is officer controlling expenditure. Officer controlling expenditure. That is the officer in charge of a vote head or sub-head. In reality, the head of account usually doubles as the officer controlling expenditure. But in bigger operations, in a typical ministry, they don't do that. You don't need that in a ministry. The head of account in a ministry has a large volume of work, a large responsibility. Therefore, they usually delegate it to the most senior account officer or the most competent and most trusted hand in the account, but usually it has to be a senior officer. It may not be the most senior. So that person, that's the officer you see handling the vote book, the officer in charge of vote book. He will always sign on every voucher. But in smaller organizations like agency, small parastatal, it is the head of account that usually does that. That's officer controlling expenditure. Okay, now, so if we have the slide with us, you will see where we have diagram on financial responsibility. Let us check that area. I don't know whether there is somebody in the house that can help us to share the slide. Hello, are we together, sir? Hello? Hello? Okay,
Yeah,
okay.
yes,
So
sir,
if
yes,
you look at
together.
that, okay, thank you very much. So if you look at that diagram, you will see account general and auditor general beside each other. They are officer of concurrent responsibility. None is subject to the other. But the way the operation goes, you will know that account staff will submit their records, their information to auditor. They will attend to queries by auditor. Auditor can give them query. It doesn't mean that they are subject of the auditor. So it has nothing to do with grade level. It has nothing to do. It's line of operation, line of responsibilities. It's a workflow. It's a workflow. So that is that. So the next one is sub-accounting officer. Accounting officer. Why do they call them accounting officer? They will be the one that will account for all the resources by virtue, by the description provided in financial regulation, the way it was described. It means they will be the one that will account for all the personnel. Why is your officer collecting, being overpaid or being short paid? Why is it that somebody that has traveled out of the country, you refuse to report it? In fact, there's somewhere in the financial regulation, people don't know. There's somewhere in financial regulation that say that anybody, any officer that first have access to information that somebody leave job, somebody exit the service, you know, and you don't say it, that officer, that officer will be personally responsible. That officer will be personally responsible and financially responsible. They say pecuniary responsibility. It means you'll be personally and financially responsible for the salary collected by that officer. So although the query will go to the permanent secretary, they will now transmit the query to that particular officer to answer to that. You know, we're in the era of jackpot, people travel all the time. But what financial regulations say that anybody, any officer, that first information that somebody leave the survey, you must report it. And you must also report to the head of account too. Is there in financial regulation. Let the head of account know that somebody has traveled out, they have resigned. So that is that. Don't let us go to that place now. So the accounting officer will respond for all items in the stores, all money in the account, all officers and their compliance. Why is it the officers are not complying? and so on and so forth. So that is that. Sub-accounting officer is we have explained all that, okay? Now let's move to financial control. Financial control. Financial control. Financial control. Please, somebody should just describe what we mean by financial control. Can somebody try, please? Financial control. Hello, are we there? Hello?
We are with you, sir.
Oh, thank you, sir. Thank you, ma'am. So please, what is financial control? Remember that they are not expecting us to cram anything. They want us to be natural. Just flow naturally. We don't need to cram anything. Describe in your own
Hello,
words.
sir.
I'm with you, sir.
Hello, sir. It's just a way of ensuring that financial resources are judicially expended.
Thank you very much for that, sir. That is it. It's a way of ensuring that financial resources are judicially expended. Okay. Now we have a definition in that material, a set of procedures and policy, a set of procedures and policy put in place to ensure that financial resources are safeguarded. Is about securing government financial resources and are efficiently and effectively utilized. Permit me to explain those things. Safeguard is about securing or protecting government properties and other assets, including money. Okay, that is safeguarded. The next one, efficiently. Efficiency is about curbing wastages. When you stop people from wasting money, that means you are efficient. When you don't waste money, you are efficient. When you don't waste time, you are efficient. When you don't waste your words, you don't waste A4 paper, you don't waste anything, you are efficient. So efficiency is about the use of minimal resources to attain optimal goal. That's the definition of efficiency. So most time when we are reading, you see efficiently and effectively. People think it's a joke. It's not English, oh. It's a technical term in this regard. So it's about the use of minimal resources. Then when they say that officer is efficient, when somebody get to work on time and sit down in the office to do his job, that person is efficient. Some people will come early and start roaming about in the office or watching movie or doing gossip. They are not efficient. Some people will come late and sit in the office and work. That's efficiency. So then effectively is about hitting the target. They ask you to do something, you do it well. That's effectively. But when you do it without wasting resources, without wasting time, you don't waste paper, you don't waste electricity, you don't waste resources, you don't waste other people's time, that is efficiency. Thank you for that. Let's move on. Okay. Financial control, there are different ways that we control. We have legislative control, executive control, departmental control. We also have accountant general control, which is called treasury control. Hello, are we together?
Yes, sir.
Oh, thank you very
Yes,
much.
sir, we are together,
So,
but maybe you should slow down a bit for us.
oh, I'm so sorry about that. The issue is that I don't have the slide. I want us to be looking at it together. It would have been easy. Do we have it on our phone now, please?
Yes.
Yes, it's on our
Okay.
phone.
So let me see if I can follow the page here. Okay,
Yeah.
I'm on page 7.
I
I'm
have
on
this.
page 7.
I have the slide on my computer now. How can I share it?
Thank you, sir. Please look at the Zoom, the page you are looking, the screen. You will see
Okay.
one arrow that look up, one green arrow that look up. Say share screen.
Okay.
You tap that one.
Yes. Okay.
So you help us tap it. Once you tap
I've
it,
tapped
so it will now ask you what you want to share. You will see document. You will
document.
see. You click document. Once you click document,
Okay.
you now need to search for it. You need to know the name of. I think it's Aura 2025 is the name.
Yes.
So you look. Then you click it. You click it.
Okay.
So that all of us will now be seeing it.
Okay, I'm trying it.
Okay. So once again, I'm sorry about that. One thing I want to say is that these preliminary pages, I'm sure many of us are familiar with it. That's another reason why I'm running that place fast. So I believe most of us will be used to things like this: financial authorities, financial responsibilities, those introductions, meaning, and those things. I think we're the only difference is that I'm going into that financial agreement to pick illustration. That's the only thing that is different. Apart from that, those things that we've done, those 5 pages we've done so far, many of us will be used to it.
Go ahead, sir. I'm still on it. Go ahead, sir.
Okay, so we want to talk about the types of control. When we say financial control in public service, the types of control that we have, the types of control that we have. So how do we remember this without cramming anything? We all know that in reality, the House of Assembly will like to control civil servants. The House of Assembly have power to control civil servants. Let me say public. I like calling it public servant so that it will cover everybody. If you go and look at public service rule, because that public service, I read it from the cover. So under the preface, they say they changed the name from civil service rule to public service rule so as to capture the people that are not in the mainstream civil service. Those people in parastatal incorporation, they have been captured. That's why the name was changed from civil service to public service rule. So it's better to say public servant so that it means that you are addressing everybody. Okay. So the House of Assembly have power to control indirectly, to control the public service, especially government financial resources. They have oversight power, oversight function over government resources, and therefore they have power of financial control. So when you look at the scenario, we have the House of Assembly, we have ministries, department, and agency, we have our permanent secretaries, we have the accountant general, we have the auditor general. All those people that we are mentioning, they have means of controlling government financial resources. Let me say it again. The House of Assembly, that's the legislative. The Mr. Governor and his team, that's the executive. Each MDAs, we call it departmental control. Then the Office of Accountant General, you can call it Accountant General Control or Treasury Control. We also have the Auditor General. So those are the key means of controlling the financial resources of government. So I want to start from legislative control, if we're on the same page. Legislative control. The members of the House of Assembly, they control government financial resources mainly with budgets. There are other means, but the most important one they use is the budget. But before I mention budget, let me mention another means. They can use law. They can use law to control resources, to control the public service. They can also use their pronouncements. For example, if you attend any session of the House of Assembly, maybe they invite you for House Committee on Operation or PAC or House Committee on something, maybe on your sector, maybe House Committee on Education, Agriculture. And there was a discussion, they're asking you something, you're answering. And they now intentionally, conscientiously pronounce something, say, no, the MD or the accountant should stop doing it. It is this that should be doing that. From that moment, that pronunciation becomes law because that is the law-making house of government. That is the only set of people that have power to make law. The court only interpret law. Those are the people, this is only the legislature that can make law. So those are other means that they can use to control government financial resources. They can say, you people will start having dedicated account. The only thing after that pronouncement is your documentation. They say, no, we will increase the running cost of your agency. That's just that pronunciation. They'll just follow it up with proper documentation to tidy up the process. So pronouncements can be authoritative sometimes. Okay. Just as the Mr. Governor can issue executive order. So That one is it. So the main one that we're looking at is the budget. We still talk about the budget later, but now I just want to just summarize it. So the House of Assembly use budget for finance as a tool of financial control by setting limits. There's a limit. They can say you cannot spend more than this. This agency cannot have more than this. So they can set limit. That is a cap, a maximum limit you can have on a particular expenditure. They are the one that approve the budget. Okay, so they use it as a tool of control. Thank you for that, Mr. Jami. Okay, so they use the budget as a tool of financial control. We'll speak more on the budget later. Okay, so the next one is the executive. Thank you. Thank you. So please help us move it to page 7, please.
Okay, sir. Page
Slide
7.
7. Yes, sir.
That is true. Take it down. Take it down.
Okay, it's okay. Yeah, click that one. Thank you very much. So, budget is a tool used by the legislative to control as tool of financial control. We look at all other things about budget, but before that, and let me quickly say, if they ask us what is a budget is a financial plan. A budget is a financial plan for a given period. A budget is a financial plan for a given period, usually 1 year. Remember, budget is not only for 1 year. It can be for 6 months, it can be for 3 months, it can be for 10 years, it can be for 2 years, it can be for 3 years. For example, the MTEF that everybody will say MTEF, that's medium time expenditure framework, is a budget on its own, and it's a 3-year budget. So you can't say budget is a financial plan for 1 year. No, for a particular period. So we now say usually 1 year, okay? So look at other aspects of budget later. Now we talk about the executive. The executive arm of government has many tools for financial control. One of the most important ones that we all know is warrants. Warrants. A warrant is a document issued by the Commissioner of Finance, addressed to the Accountant General, with a copy to the Auditor General. Hello? Hello?
Why, sir? Sorry.
Okay. So a warrant is a document issued by the Commissioner of Finance to address to the Accountant General, authorizing the Accountant General to release money to various MDA as appropriated. Well, in the new year, this is January. So Accountant General is not expected to release any money on the budget of 2025. It's not possible. Accountant General will not release money under the budget of year 2025 unless he gets a written instruction from the Commissioner of Finance. That instruction is called warrants. Warrants. We're still going to talk about different types of warrants and their usage later. So the next one is departmental control. That departmental control refers to MDAs, not just a department. It refers to all ministries, all agencies, all extraministerial departments, all parastatals, all institutions, all commissions, all government MDAs. The control they have over financial resources is what we call departmental control. And the tool they use is vouchers. They use vouchers. They also use vote book. They use vouchers and they also use vote book. How do they use vouchers? Remember, without voucher, there must not be payments. Without written approval of the accounting officer, there cannot be voucher. Nobody will prepare voucher unless they see written approval of the accounting officer. There will be a request or submission generated by a department or officer or unit that will be approved in writing by the accounting officer. And the accounting officer will now send it to the head of finance and account to attend to it. It is that document that the head of account will now minute to, so that another officer in that department will now prepare a voucher for it. That is a control means. It means that no money moves. Nobody control any money without the written instruction of the permanent secretary. That's what we mean by that. So voucher. Each voucher is recorded in vote book. All vouchers in the vote book. Okay. I know there are accountants in the house, and we may be wondering, why do we say all vouchers should be recorded in the vote book? That is the default setting. That is the position of financial regulation. In rare cases, this may not be the case. In a place where they have dedicated accounts, they may not record vouchers in vote book, because dedicated account is a disconnection from the CRF. Dedicated accounts are not directly connected. Let me explain very well. In a typical ministry or any other MDA, especially ministry or any other MDA, any money they collected, any money they generated, they pay directly into government account, into the treasury. They don't have their own account for receiving revenue. It is only when you have a dedicated account that you can receive revenue into your agency account or MDA's account. So a majority of MD don't have dedicated account. So that is that. We go to that later. So the last one we talk about is treasury control, controlled by the accountant general. The accountant general control the system with the issuance of circular, and that circular is called treasury circular. However, as in the cases of order that we have mentioned, that the House of Assembly, apart from budgets, they use other means too. They use law, they use pronouncement, and other too. The executive, apart from warrants, they can issue executive order, and so on and so forth. The MD, that departmental control, apart from voucher, they use vote book. So the same thing, the accountant general, apart from circular called treasury circulars, accountant general can also control financial risk by other means. For example, there's something called accounting code. There's something called accounting manual. So and so on and so forth. Those things, they use them to control the system. For example, accounting manual it will spell out, it will explain how to do things. It is the operating manual. It is standard operating procedure. It is our business process. So they can modify it. They can add, they can remove. So they use it to control the system. So that is that. Please, let's go to the next slide, please. The next one. Hello, sir. Thank you. Now we talk about the budget. What we're doing now is those things we mentioned under financial control. We want to take them one after the other, one by one. All those things that we mentioned under financial control, we want to take them one after the other, one by one. So the first one is budget. We have defined budget as a financial plan for a given period, usually 1 year. A budget.
Someone want to ask question. Mr. Onike, could you raise your hand?
Okay, thank you for that.
Mr. Onike, you raise your hand now, Mr. Onike. Okay, go ahead, sir.
Okay, thank you, sir. So alternatively, the person can write the question on the chat. I'm checking it. Okay. So moving on, we say that in case we are asked, what are the contents of a budget? What are the things you will see in a budget? Before we answer that question, we should know that any financial document, any document that talk about finances, that talk about money, we expect that document to have a title. It will have a heading, name. It will have a name. So every budget has a title. In fact, every budget has I don't want to call it nickname. It usually have, they can say body of consolidation, budget of renewed hope, budget of reconstruction. They always have name. A budget must have a name, a government budget. They always, if you check it, they always have a name. So content of a budget, it will have a name. Okay, for accountants, it will have a reporting currency. It will indicate that this thing is in naira or dollars. It will have a benchmark, but I don't want to go to that area. Let us look at the simple area. It will have a name. It will have projected expenditure, that is estimated expense, estimated expenditure. It will have projected revenue, that is estimated revenue, not actual. Estimated expenditure, estimated revenue. A budget. So I want to quickly check what is different between. Oh, thank you very much. Thank you. Somebody has a question. What is the difference between warrants and AIE? Hello, are we all together, please? Hello? Hello?
Yes, we are with
Yes,
you,
sir.
sir.
Okay, thank you very much. Somebody
We are
just
with
asked
you,
a
sir.
question, Mr. Lukman Onikeku. So the question is what is different between warrants and AIE? You will notice that we always mention warrant, okay? So the major difference is that warrant is issued by the Commissioner of Finance at the state level. At the federal level, warrant is issued by the Minister of Finance at the federal level. At the state level, by the Commissioner of Finance. In both cases, warrant is usually addressed to the Accountant General. Warrant is usually addressed to the Accountant General. Another thing, warrant, a copy of warrant, a copy, we did not say photocopy, a copy of warrant will be given to the Auditor General. If you look at our vouchers, you will see that it has about 5 copies. So, and none of them is photocopy. So it's not, so some people call it photocopy. When we say a copy of warrant should be given to, people will say photocopy. No, a copy of warrant will be given to Auditor General. Original copy will be addressed to the Accountant General. And then the warrant will contain instruction that Accountant General should start releasing money to various MDAs. So it will specify whether it's capital or recurrent. So based on budget of year year 2025, for example. But in the case of AIE, it is not issued by the Commissioner of Finance. So, and it is not, a copy may not be given to the Auditor General. I'll talk more on that later before we end. So let me quickly go through the second person, Mr. Ahmed Kotun. The question is, what is the financial control of Auditor General? Thank you very much. Financial control of Auditor General is that the Auditor General will deploy, officers to all MDAs and other arms of government, all MDAs, that is every ministry, department, and agency. Auditor General will send representative to go and check the level of compliance with financial regulations, level of compliance with appropriation law, which is the budget, level of compliance with internal control. There is a system called internal control, the way they want things to be done financially in the MDA, the internal control. So the Auditor General will deploy officer. So that is the mode of control of Auditor General. So that's controlled by Auditor General. Thank you for that question. Okay. If you look at the screen now, we have talked about the meaning of budget. We have talked about the content of budget. Well, let me quickly complete that content of budget. A budget will have a name. A budget will have expenditure, estimated expenditure, estimated revenue. A budget will show capital expenditure and the items, the line items under it. A budget will show recurrent expenditure. A budget will show recurrent expenditure. Those are the major things we have in under recurrent expenditure. We have personnel cost, staff emolument. We also have running cost. Okay, so those are the things that budget we show. Okay, it will show heads and sub heads of those things. Okay, so that is that. Now, why do we need a budget? If they ask me in an interview, why do we need a budget? If I don't know the answer, I know that budget is for planning. So I will quickly ask myself, why do I need a plan? Why do we need to plan? Because budget is for planning. Why do we need a budget? Budget is for financial planning because it's a plan on its own. So we need a budget because we need to plan ahead. Okay? That is one, for financial planning. Number two, we need a budget because it is a statutory requirement. The law say that you must prepare a budget. That's what the law say. Financial regulation also say that you must prepare a budget. They say the permanent secretary must prepare. The word is accounting officer. One of the responsibilities of account is to lay the budget before the House of Assembly. Now, Mr. Governor will do that. The accounting officer will do that. Mr. Governor is not an accountant. And the accounting officer is not an accountant. That's why people say that. That's why people say that all sub-accounting officers are accountant, but not all accounting officers are accountant. Accounting officer, for example, permanent secretary can come from any profession, but sub-accounting officer must be an accountant. That's why we say all sub-accounting officers are accountant, but not all accounting officers are accountant. Okay, so preparation of budget is part of the responsibilities of accounting officer. So they say, why do we need a budget? Number one is that for financial plan, because we need to plan. We need to plan ahead. We need to plan government activities or the activity of the ahead of time. That's one. Number two, because it's a statutory requirement. The law say that we should prepare. If you don't remember the name of the law, remember that financial regulation say that we must prepare budget. Public finance management law say that we must prepare budget. The Nigerian constitution say that governor and president and chairman of local government must prepare budget, and they can't be everywhere. The accounting officer are their representative. So accounting officer must prepare budget. Accounting officer are not all of them are accountants. So the sub-accounting officer and the planning officer must help them to prepare the budget. So that is that. How many have we mentioned? Hello, are we there? How many have we mentioned under the need? Why do we need a budget?
Two.
Oh, only two, okay.
Yeah.
Another one is control, financial control. For controlling purposes, we need a budget. Why do we say control? Okay, the government has maybe 100 trillion or 100 million naira, and then they want to be in charge. They want to know who spend what, when, and for what purpose. For you to do that, you need to put it down before they start spending. That means you need to prepare a budget. So for controlling, to make sure that admin department spend this, account department spend this amount, procurement department spend this amount for this purpose, this amount for this purpose. So you document everything. That is the budget. Therefore, for controlling purposes. Then another one is for monitoring purpose. So for monitoring purposes, you need a budget. Why? Because you say you want control. Now, to make sure that they do exactly what you ask them to do, you need a budget to be comparing the actual with the plan. So budget is for monitoring, budget is for controlling, budget is for planning, budget is for fulfilling statutory requirement. We have only mentioned four. We have more than 10 of them. Okay, let me quickly mention some other one. For documentation, for record keeping, the budget of 1991 is still in the archive. The budget of 1960 is still in the archive. It's a permanent document that is not meant to be thrown away. Therefore, for permanent record, for record keeping, that's another reason why we prepare budget. If you go home today and you are the person that usually prepare a budget, you can see a piece of paper, how you plan the last year Christmas or this Christmas, how you prepare last Ramadan, how you prepare last Easter fiesta, how you prepare, you pay your children's school fees or the feeding allowance at home. There must be somewhere you have written, you have written that. We always tell people that you must prepare budget for everything in writing. People will now say, if I prepare budgets, people will be, if I write it down, people will be saying my plan. They will not know. You write it in a way that people will not understand. If you see my diary, you will not understand anything. You just be looking. You'll be looking and you will not see anything. You write you write your plan, your life plan, you write it on paper. Write it in a way that people will not know. And luckily, WhatsApp used to code. There is a special way you lock only WhatsApp and you open the rest of your phone. You can do it right yourself in you. That place they call you in WhatsApp. You can put your plan there. Then you lock it. You'll be the only one that will be seeing it. If it is not written, it's not done. So we have mentioned planning, we have mentioned controlling, we have mentioned monitoring, we have mentioned legal requirement, we have mentioned record keeping. There are others. Another reason for budget is appraiser. They want to appraise your performance. Appraiser, they want to know what you have done. They want to compare two organizations, two MDA. They want to compare your performance last year with this year performance. It is only through budget that they can do that. You know, we are not profit-oriented organizations. So, therefore, budget is used for appraisal, it's used for performance measurement. I don't want to waste much time on that. Let's move to the next one. Budget size. What is the meaning of budget size? Budget size is the total amount of money captured in the budget. So, in some parlance, they will say budget size is the total of capital expenditure plus recurrent expenditure. When you put that together, you will get the total amount of money in a budget. So that's the meaning of budget size. So, ladies and gentlemen, please don't forget, any year you are going for interview, you must know the budget of Lagos State. You must. So I want somebody to tell us, what is the budget of Lagos State this year?
3 trillion.
Thank you very much. Who is that? Thank you very much. Thank you very much, sir. So we need to know the budget of Lagos State in year 2025. We need to know capital and recurrent expenditure inside the budget. Those things are very, very important before we go for interview. And it is handy. It's something you can quickly type on your phone and check. So, what is the ratio of capital and recurrent, please?
17.3 and 1.3.
Thank you very much. And we have 3 trillion and 17.3 and 1.3. 17.3 to 1.3. If you put that in ratio, we will get ratio word to word. Can somebody quickly help us, please? Budget of capital to recurring. Okay? Hello, anybody there? Okay, I'll get back to you on that. Let's quickly move on. But let me do a bit of analysis on that budget area. Okay? In a budget, you will notice that in Lagos State, for more than 10 years, for even about 20 years now, the ratio of capital is always higher than recurring. But for federal government, the ratio of recurrent is always higher than capital. Majority of the states in Nigeria, if you look at their budget, recurrent is always higher than capital. Now, what is the implication of that? This is for senior colleagues for 15 and above, please. That area, you must have idea of budget. That one is compulsory, please. They may not ask you. It doesn't mean that you have escaped. You will meet them later. It could be a program. It could be your next promotion again. You must always be conscious of budget, capital, recurrent, the ratio, the total budget size, the budget. It can come anyhow. Okay? Now, when you see that trend, what is happening? It means that the state is moving forward. One of the things you look at when you're looking at development is you look at that area, capital to recurring. It means that there are more roads, more hospitals, more schools, more equipment that are being bought in Lagos than other states, and proportionally than federal government. Proportionally, not by absolute figure, but by percentage, it's higher than federal government. The number of roads that they are doing every year, the number of hospitals, number of bridges, number of classrooms, number of new employees. So those are the indicators. That is why when you go to other states, you will see that the pace of development is very, very slow because they just spend their money mainly on maintenance. So that is that. So let's leave that one there. Let's move on. The next one, budget horizon. What is budget horizon? It is simply the period, the length, the period of time covered by a budget, number of years or number of months covered by a budget. That's budget horizon. For example, our annual budget is always 12 months, but the medium-term expenditure framework budget, the MTEF, is usually 3 years. MTEF is 3 years. Okay, so that is that. So the Lagos State Development Plan, the latest one will expire in 2052. From 2023 or 2022. I'll check that later. So that's a long-term plan. Hello, sir.
It's from 2022 to 2052.
52. God bless you, sir. That should be 30 years, Abby. That should be 30 years. 22 minus 52. That should be 30 years. So it's a long-term plan. So as far as I'm concerned, me, I'm an accountant. It's a budget. It's a long-term budget. Why did you say it's a budget? When you look at all the things, all the beautiful plans there, it cannot happen without money. If you pick anything in that LSDP and you want to do it, you will spend money. So since it's a plan, it's about the future, and it's about money, then it's a budget. I hope we are together, everyone, please. I hope we're together.
Yes, we are.
Okay. So the next one we have.
Kindly recap.
Oh, okay. Okay, thank you very much. Let me quickly recap. In the beginning of this area, this particular slide, this particular page, we talk about the meaning of a budget. We talk about the reasons for a budget. Why do we need a budget? We give about 5 or 6 reasons that because we need a plan, financial plan. Because budget is a planning. So we say budget is for planning, 1, controlling, 2, monitoring, 3, appraiser, 4, documentation, 5, legal requirements, 6. So there are more than 10. In one of my book, I have about 15 reasons why people do budget. But they can't ask you to mention 5. Once you mention 2 or 3, is okay. Even 1. Most times is 1. You remember now. You remember how the interview goes. It will be like a circle. They will say, come in 3-3 or in 5-5. So another important thing that I want to mention when it comes to interview is that always pay attention to the question they ask the person beside you. It's very, very important. Any question they ask the person beside you, they usually determine the question they will ask you. So if you are the second person, the person before you is likely to miss the answer because it will come to him suddenly. Hello, are we together, everyone?
Yes.
Okay. So the question they ask the person beside you will split over most time. If the person miss it, it will be a bonus for you. Once you're able to get that question, the question they prepare for you may not come. And if it comes and you miss it, they will still consider because you meet up with the requirement of the person before you. So when they say, you tell me the purpose of a budget, therefore they are likely to that person will mention 1 or 2, like most likely 1. That means you must be ready for something similar. Reason for a budget again, or similarly on a budget question. Okay, so that is that. I'm still recapping, madam. So content of a budget. Say, what are the things we can see in a budget? When you open Lagos State budget, what are the things? You see the name Lagos State government. You can see the title of the budget, maybe budget of renewed hope, budget of reconstruction, budget of inclusion, budget of they will just give it one name. Okay, then you see recurrent expenditure, you see capital expenditure, and we say that under recurrent expenditure, we usually have personnel cost. That means staff salary, staff emolument, pension and co. And then running cost. You will see that one. In fact, running cost, the 7 standard line, they will list it there. We're still going to talk about. They will list it in a budget. Okay, in any budget, whether your department or ministry or even the Lagos State aggregate budget, they will list the running cost there. The 7 standard is always there. Okay, Then where we are going now is, okay, we now say budget size is total amount of money, and they also call it total of recurrent expenditure plus capital expenditure. That's budget size. Then the last one that I have not mentioned is challenges. And please, I want us to participate here, please. But let me quickly, somebody send a message. Let me quickly check. Oh, thank you very much. Miss Deborah Adako, thank you very much. She has given us the ratio. Capital expenditure is 1.7 trillion. Recurrent expenditure is 1.3 trillion. This is what I was saying earlier on. That in Lagos State, in about 20 years now, our capital is always more than recurring. It means that if you come to Lagos State today, if you come back next year, you will see new roads, repair roads, new school, newly built hospital, or repaired or upgraded one, new generators in some MDAs. That is the meaning of this figure. All the figures are speaking languages. Okay, so that is the meaning of this figure. So recurrent is 56.7. Sorry, capital is 56.7 and recurrent is 43.3%. That's indication of progress, that Lagos is making progress. But most of the states in the country, including federal government, most times their recurrent is always higher than their capital. That means that means most of the money is going for salary, repairs, maintenance, instead of construction, acquisition of asset, upgrading of asset. Instead of that, they are spending most of the money on salaries and other emoluments and other expenses. Okay, thank you. Somebody ask a question. Okay, 2 people now. Somebody, thank you very much. Somebody ask a question. Mr. Ismaila Babatunde showing me. The question is it 7 standard lines or 9 standard lines? The answer is 7 standard lines. Let me quickly mention them before we move on. 7 standard lines. In no particular order, we have travel and transport, LT&T, local travel and transport. That's the first one. The next one is maintenance of office building. Maintenance of office building. That's number 2. The next one, motor vehicle repair and maintenance. That's number 3. MV repair and maintenance. Motor vehicle repair, number 3. Then number 4, motor vehicle fuel consumption. That is the money they are giving all of us as fuel allowance every month. Motor vehicle fuel consumption. That's number 4. The next one is stationary, number 5. Stationary, number 5. Miscellaneous, number 6. Miscellaneous, number 6. General utility service, number 7. Remember, I say in no particular order. I did not follow the code. If I follow the code, miscellaneous expenses and similar will come as last one. Why transport will be the first one, followed by office building, followed by motor vehicle repairment, followed by motor vehicle fuel consumption, and so on and so forth. But we don't need that. So I've mentioned the 7. There are 7. It will be written in the budget of this every year. They spell it out clearly. And if you take the budget of your MDA, you will see it there. You will see it there. So I've answered that. Let me see the next question. Okay, thank you. Another person asked question, are the standard lines the same as running cost as well as overhead? That's Mrs. Itunu Bemisola Babarinde, okay? The question, the question, I want to answer the question. Okay, overhead. I want to start from that place and I'll bring it down. Overhead. All government expenditure are divided into 2. We have capital and recurrent. Capital and recurring. Capital has to do with acquisition of assets generally. But sometimes it is just huge amount of money that is capital in nature. But generally speaking, capital expenditure has to do with acquisition of assets. Generally speaking, acquisition of assets. That you want to buy vehicle, you want to buy generator, you want to, sometimes in accounting, sometimes if there is a major overhaul or major repair, for example, That generator you are using in your office, there are some components, when they buy it, it can buy another generator, the one you are using at home. There are some vehicles, their gear will buy another vehicle. So such is also a capital expenditure. When you have a major component of an asset, so it's also capital in it. But generally speaking, capital expenditure has to do with acquisition of as tangible asset, capital expenditure. Okay. Now, the other aspect is recurrent expenditure. Recurrent expenditure. Look at that name, recurrent. It is from recur. Recur is from reoccur. Reoccur means repetitive. So there are some expenditure at home in our houses. There are some money we spend regularly. For example, payment of NEPA is recurrent, but buying of prepaid meter is capital. You can see the difference. One is repetitive, the other is not repetitive. So recurrent expenditure is repetitive in nature, and it is generally for maintenance and daily operation, maintenance and day-to-day operation. The day-to-day operation is run by officers, so salary of officers is a recurrent expenditure. So I want to go back to the way I'm arranging it. I want to go back. Look at the question. Are standard lines the same as running costs as well as overhead? We say that all government expenditure, all government spending are divided into capital and recurring. I have explained capital. I'm now explaining recurring, that recurrent are repetitive. Now, under recurrent expenditure, it is divided into two. Recurrent expenditure are divided into two. We have personnel cost, that's staff emoluments, personnel cost, and then the other one is called overhead cost. The other one is called overhead cost. Overhead cost. I think we should have a diagram in this slide. Let me check. Okay. It's not here. No problem. So let's move on. Hello, are we there, please?
Yes, sir.
Hello.
Yes, sir. Yes, sir.
Oh, thank you very much.
Yeah.
Okay, so we say that recurrent expenditure are divided into personnel cost and overhead cost. We have explained the meaning of personnel cost. It is staff emolument. What is the meaning of staff emolument? Staff salary, staff pension, staff bonuses, staff welfare, all those things, they are personnel emolument, not only staff salary. All allowance, all these Christmas bonus, all this pension payment, gratuity, all together is called personnel emolument or personnel cost. Okay, that is that. The only one we have not talked about under that is now overhead. Look at the name, overhead, something that is general. So it is the money you spend on general maintenance of all departments, all MDAs, and all operations. For example, repair of equipment, servicing of vehicle, fueling of vehicles, fueling of generator, they are all called overhead. Okay, that is that. Now, the question is now that, is running cost the same thing as overhead? Is running cost the same thing as overhead? We can say yes and no. Why do we say yes and no? Running cost is overhead, but it is not only running cost that constitute overhead. There are other overhead that are not running cost. Let me explain. Every month, your MDA collects money as running cost into a special account. But every month, your MDA also collects another money that is not running cost, but they are also overhead. It means apart from running costs, there are also other overhead. For example, your conference, you go for conference every year. That one is not running cost now, but it is also overhead. So apart from running costs, there are other overhead. So I don't want to say that running cost is the same thing as overhead. No, people say that, but it's not correct. Running cost is part of overhead, not equal to overhead. Your overhead is more than running cost. Your running cost could be 1.5 per month or 2.5 million per month. But your overhead, go and look at the budget. Per month, it could be maybe 50 million. It depends on your general overhead budget divided by 12. So that is that. The other aspect of the question has three legs. Where is the question? Oh, okay. standard line the same thing as running costs as well as overhead. I have explained the meaning of overhead. I have explained the relationship between running costs and overhead. The overhead is a mother, but it has more children. One of the children is running cost. Running cost is the firstborn. It has another children. Okay, now standard lines. That one. Running costs are standard lines. So people say that standard lines is the same thing as running costs. Generally is correct, but technically is wrong. But don't worry about the technical aspect. I'll just explain the technical aspect. The reason why I say technically is wrong is that the other aspect of overhead also has its own standard lines. But because it is the running cost that every single employee have access to, every single officer benefit from the running. That's why we think that running cost is same thing as overhead and is the same thing as standard line. Running costs are standard line, 7 standard line, clearly written in the budget. It doesn't mean that other expenses doesn't have standard line. They have standard line, but they are not pronounced. And their own standard lines is peculiar. They are unique. If you work in hospital, maintenance of special equipment is a standard line, and you can't see that any other place. Maintenance of tractor is a standard line in Ministry of Agric, but it's not pronounced, and they are not running costs. Special educational development is a standard line somewhere. There are so many like that. So I hope I have answered the question very well. So that is that. Somebody also has another question. Thank you very much. The person gave us information that the title of budget 2025, that is Mr. Shobowale Tunde, gave us the answer to that. The title of your 2025 budget is Budget of Sustainability. Please, those who want to do interview this year, please, let us get that. Budget of Sustainability. Budget of Sustainability. And the capital expenditure is more than recurrent expenditure. And the ratio of capital to recurrent is 56.7 to 43.3. It's available online. You can check it online at any time. But please, don't go to the exam or the interview hall without knowing information about budget. They always ask about budget. They may not ask you this year. It doesn't mean that we have escaped it. It's important for all management staff to have idea of budget. Okay? So, that is that. So, please help us move to the next slide, Mr. Jamil, please. Next slide, please. Hello, sir. Are you there?
Yes, sir.
Thank you, sir.
Another slide.
Yes, sir. Number 8. Thank you. Thank you. Somebody here, Miss Aminat Olabisi Oduwole, has given us the standard lines. Thank you. I've mentioned them. I've mentioned the 7 standard lines. Thank you. I want to read what she wrote. Stationary, local travel and transport, maintenance of office building, motor vehicle maintenance and repair, utility, that's general utility service, motor vehicle for consumption, miscellaneous and stationary. Thank you very much. We have mentioned that. Okay. Now, the next one, warrant. As I said earlier on, we say that all the items in that slide, that those control tools that we are discussing them one after the other. The first one we just did is budget. This one is warrant. Okay, we said that a warrant is a document issued by the Commissioner of Finance authorizing the Accountant General to release funds. That's the meaning of a warrant. We also say that a warrant is addressed to the Accountant General. A copy of the warrant will be given to the Auditor General. We have said that. Okay. We also say that as at now, January 2025, Accountant General will not release any money that is related to 2025 budget. It is not possible. You have to wait till Commissioner of Finance issue warrants. And that warrant, it will be publicized. All of us, you will see it yourself. It will show the address, that is going to Accountant General. It will show the person that sent it, the Honorable Commissioner name and signature. It will show whether it is capital or recurrent or both. The amount for capital, the amount for recurrent expenditure, it will show. It will make reference to year 2025 budget. Those are the content of a warrant. I know they can't ask us that question unless you're an accountant. Okay, they won't go to that level. But it's important we have idea of those ones. So if you look at the screen, the question is, who issue or sign warrants in Lagos State? Is the Honorable Commissioner for Finance. That's HCF. HCF. Then it also asks us, what are the content of a warrant? I have mentioned that. It will have dates. It will have signature of the Commissioner of Finance. It will have name of the Commissioner of Finance. It will have the amount budgeted for capital expenditure or recurrent expenditure or both. Usually it contains both, but theoretically, they expect them to issue warrant for each, separate for recurrent, separate for capital, separate for personnel, and so on and so forth, separate for running costs. But practically, in practice, they combine everything on the same warrant. You can have 20 pages, a very big document. It will look exactly like a circular. So, but it's a financial authority. Remember when we discussed financial authority? Okay, we say that any document that empowers and guide public servants in carrying out their official financial transaction, your day-to-day work that has to do with money matters, any document that is guiding you or protecting that operation, that activity, or protecting you in Canada, that's called financial authority. Okay, sometimes they call it legal instrument. Okay, now the last aspect of this particular page is, okay, mention 6 types of warrant. Classification of warrant. Okay, generally warrants are classified into recurrent expenditure warrants and capital expenditure warrants. Capital expenditure warrants are also called development warrant, development expenditure warrant. Before we move on, I want to check this message. It's Gbemi Sola Labarinde. What happens in the interim before warrant is issued? Okay, somebody was asking a question that what will happen before warrant is issued. Okay, we're in January 2025, and we say that Account General cannot release any money that relates to 2025 budget unless there is a warrant. So if there is no warrant, what will happen? Okay, let me start this way. There is something called provisional warrants. There is something called provisional warrants. If you look at the word provisional, it means tentatively or temporarily, in the interim. Those are the words we can use when we look at our dictionary for provisional. Okay, therefore, it means that before the budget is passed, that is theoretically, they say before they pass the budget. So, but now before they issue the warrant. So, provisional warrant is also a warrant itself. So, before they issue provisional warrant, before they issue any warrant at all, that's what the question is referring to. What we are expected to do, if it is an MDA, if it is an MDA that has dedicated account, is an MDA that has dedicated account. A dedicated account is always a revolving fund, a revolving fund. So, and the purpose of dedicated account is to make sure that the operation of the organization didn't stop. The dedicated accounts are always given to special organizations that have social services, essential services. That's what I want to remember. Essential services. So, because of situation like this, if you work in a hospital and they say they have not issued warrant, Account General will not release money, people will be dying in hospital. So they give them dedicated accounts. So with that dedicated account, the operation continues. What about other MD that does not have dedicated account? What will happen? What they do all over the world is to minimize their operation, to be running skeletal operation until warrant is issued. Luckily for us, in Lagos State, unlike other states, Lagos State will make sure that the budget is ready before January. So there'll be nothing stopping us. It means that any moment from now, warrant will be issued. So that is that. I want to answer the question again. Skeletal operation will be run pending the time warrant will be issued. And for essential services, they have already given their dedicated account. They are in charge of their money. They continue their normal operation. They continue spending and account for it later. So that is that. Hello, are we together?
Yes,
Yes, sir.
yes.
Okay,
Yes,
please
sir.
help us move to the next slide because of time. Okay, I want to move to the next slide, but I'll quickly mention other types of warrant. Provisional warrants. That one is issued before budget is approved, so that the MDA will be spending money before budget is approved. That's provisional warrant. The second one, annual general warrant. Annual general warrant is issued on the basis of the approved budget. That's when the budget is approved. The money will be spent based on annual general warrant. The next one is called supplementary warrant. That is when the money in the budget is exhausted completely or about to be exhausted, they will prepare another budget called supplementary budget. If that is approved, then a warrant will be issued to authorize spending money from supplementary budget, and that warrant will be called supplementary warrant. The other one is violence warrant. In Lagos State, violence warrant is illegal. In some places, they will ask us, is violence warrant legal or illegal? So the answer I usually give to them is that it will depend on where you are. In Lagos State, it is. In some other state, it is not. In some other state, it is. We say that violence is illegal in some state, and because we are in a federation. When you are running a federalism system of government, each state has the power to make their own law, regardless of what federal government is practicing. So, although violence is illegal, we say that the House of Assembly is the law-making arm. The only set of people that can make law in Nigeria, that can even change the constitution, is the House of Assembly. So even if violence is illegal in Lagos State, the House of Assembly can still authorize it. So you will read from the books that violence is illegal. They will say into our ears that violence is illegal. But when you open your eyes very well, you'll be seeing violence, because the House of Assembly can do and undo when it comes to lawmaking. So let us leave that one there. So I've mentioned only 4 now: provisional warrant, annual general warrant, supplementary warrants, violence warrant. Another one is statutory warrants. Sometimes a special law can be passed. And when special law is passed, so that statute, that law may be to effect a particular activity that will need money. So they may authorize money to be spent in that regard, and they will now need statutory warrants. Statutory warrants. I've mentioned 5 or 6 types of warrant. However, I said earlier on that they are all categorized into 2: recurring. That means you have recurrent expenditure provisional warrant, recurrent expenditure annual general warrant, recurrent expenditure violence warrant, recurrent expenditure supplementary warrant. The same thing with capital expenditure. We have capital expenditure provisional warrant, capital expenditure supplementary warrant, capital expenditure annual general warrant, and so on and so forth. So that is that. Next slide, please. Oh, this is okay. This is okay. Now we want to talk about voucher. We want to talk about voucher. We want to talk about voucher. Hello, are we together?
Yes.
Hello?
We are together.
Oh, thank you very much. Thank you very much, sir. Okay, voucher. We say a voucher is a document authorizing the release or receipt of fund. A voucher is a document authorizing the release or receipt of fund at the level of MDA. Okay? If you look at it in practice, you will notice that voucher is always about payment. But it does not mean that all vouchers are about payment. There are some vouchers that relate to receiving, collection, receiving money, collecting revenue. They are called receipt voucher. There are also vouchers that relate to adjustment. So we have 3 categories of voucher, three classification of vouchers. We have receipt voucher, adjustment voucher, and payment voucher. But generally across the service, the one that is popular is payment voucher. Payment voucher is also called TF1, Treasury Form 1. TF1, Treasury Form 1. TF1, Treasury Form 1. That's another name for payment voucher. The other two types of voucher, don't worry about them. It is specifically meant for accountants that are working in the Treasury. So that is that. If we have any question on them, we can ask. But I'll give you an example of a receipt voucher, another example apart from the paying slip. There's another example of receipt voucher. If you go to the the storeroom of your MDA or the store unit, you want to collect something from store, or let me say you supply something. There is a document that they fill that indicate that this item you supply have been brought in. They have recorded it. So that document is called SRV. That SRV is also a voucher, and it is a receipt voucher. It is called store receipt voucher. With that, you will agree with this definition that a voucher can be for release, that is payment issue, or collection receipts. So that is that. So, contents of a voucher. What are the things you see in a voucher? A voucher, we have dates. A voucher, we have amounts in words and amounts in figures. A voucher, we have beneficiary, that is payee, the person that wants to collect the money or receive the benefit. That's the payee or beneficiary. A voucher, we have description of the item. If it is money, money for what? If it is item, description. Laptop, is it HP laptop? What's the serial number? All those things. Description of something, also called particulars. Those are the things we can see in a voucher. Please help us move to the next slide, please. The next slide, please. Okay, this is what it looks like. We can see it now. You can see that number 3 you are looking at is the voucher number. That number, the yellow one on the top right, is the year. They tell you the date of the voucher. That number 5, that big black one, is the code, the accounting code. We call it vote of charge. Vote of charge. They also call it, under our regular financial, we call it description. There is a name we also call it there, but general name is VOC, vote of charge, that everybody use across the service. Just say VOC or vote of charge. So number 6 is where the person recording in the vote book, that's where another person will record. Number 7 is the check number and the name of the bank. Number 2 is the description and amount, and so on and so forth. So that's it. Next one, please, sir. Next one, please. Okay, thank you. Revenue. Revenue is another important aspect of financial regulation. It's another very important area. So they want us to know about revenue. So if we are going for oral interview, we must have idea about revenue. We must have what are the revenue of your MDA. A management staff should know the sources of inflow to your MDA. Are they receiving subvention? Are they receiving running costs? Are they receiving capital receipts? Are you receiving donation? Do you work in a place where they donate to? That donation is also a source of revenue, a major source for some. Are you selling anything in your MDA? Do they sell circular? Do you render service and people pay for it? Those are the sources of revenue in your MDA. For example, when I was in Ministry of Finance, we deal with land use charge. Land use charge is a type of tax. Is a type of tax. Is a property tax. Now, anybody that has property will pay based on the value of the property that person has. Is a property tax. So we collect that on behalf of the government, and that's our major source of revenue for Lagos State. We receive billions annually for that, okay? So it depends on where you are working. If you work in school, the school fees is a source of revenue. If you work in hospital, the hospital fee and donation is a source of revenue. So that is that. We now say that we have tax revenue and non-tax revenue. Example of tax revenue is payee. That money that they deduct from your salary as pay as you earn is a direct tax. It's an income to Lagos State government. So it means that you yourself, you are generating money for Lagos State government. The money they are deducting from our salary runs into millions, hundreds of millions every month on a monthly basis. Okay. So we have other taxes too, like value added tax. That one is collected by the federal government, and it's collected by the federal government to be shared to all states and local government. Thank you very much. Somebody asked, grants to organizations, are they part of revenue? Yes, it is. Grants is part of revenue. Grants, they are part of our revenue. Grants, donations, they are part of our revenue. Okay, there are others like that. Taxes, fees received, sale, disposal. When you board items, they say some items are unserviceable. Let us board them. That's another source of revenue. So there are a lot of sources of revenue. But it is important, if you look at this, it is important for you as a person to know the source of revenue to your agency. Because in that hall, in the interview hall, you could be the only person from your MDA out of about 5 people on that seat. So you are not, there's no way you will copy another person in that kind of question. So it's important. Some of the things they like to know is whether you know what is going on in your MDA. If you know what is going on, that means you have aspiration, you have career prospect. That means you are good to be a head of an MDA in the future. That is some of the things they have interest in. It means that you are participating in what is going on in your MDA. If you are there, you don't know source of revenue, that means maybe you don't come to office or you don't know what is going on. So that they like to check that too. According to public service rule, what they check when it comes to promotion is they check your capabilities, that is your future usefulness. Are you useful now? That will determine whether you'll be useful in the future. They check, they review your activity. What has happened? When they see comments of your superior, they know that, okay, this one, well, he or she is cooperating, is working fine. Okay. Then they check feedback, career prospect. What did they recommend for you as a training? How many training have you gone to? Those are the things they check. When I was reading about SPADEF in Public Service Rule Chapter 1 yesterday, is it Chapter 1 or Chapter 2? Yeah, so that is that. So let's quickly move to next slide, please. Next slide. Thank you. Expenditure. Oh, we won't take time on this one. We have explained the meaning of expenditure. We say all costs incurred, all expenses incurred by government MDs in their official capacity. That is very, very important when you are defining expenditure. They put money in your custody, you spend it for personal use. That one is not government expenditure. That is your own personal edict. So it is important we say official capacity or official matters or official operation when we're defining expenditure. We have explained the meaning of capital and recurrent and their sub-classification. So I don't want to waste your time. We have talked about standard lines. So I don't want to waste your time on that. Are we together, everyone? Are we together?
Yes.
Okay, so
Yes,
the
sir,
only
we
thing
are
we want to talk
together.
about, thank you very much. The only thing we want to talk about now is stores. 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 Who can help us with the meaning of stores? We can say it. Stores. What do we mean by stores? Can anybody help us, please? Stores. Stores.
Can I?
Okay. Yes,
talk?
yes, please. Thank you.
A store is a place where goods purchased in an MDA are kept, either consumables or majorly consumables are
Okay,
kept.
thank you, ma. But please, according to financial regulation, if we use financial regulation to mark it, the answer is not really totally correct. But thank you very much for the contribution. The reason is that generally we can say that, but when it comes to financial regulation, we can't use that definition. Stores refer to all items, all movable items. For example, your laptop is part of stores. So it's store items that they refer to as stores inside financial regulation. So store is defined as all movable items. According to chapter 21 of financial regulation, store is covered under chapter 21, 22, 23, 24, 25. About 5 chapters under financial regulation are referred to as stores. I want to shout up NEPA, but everybody will be hearing me. So maybe I should turn off the mic and say up NEPA and dance, man. Okay.
You have said it already.
I've been using my handkerchief since. Okay, thank you very much. So stores are all movable items. All movable. All these toiletries, they are movable items. The collective name for all of them together is stores. Let me explain again. There is a project, maybe in the National Stadium. They now appoint you to be the head of the project. So financial regulation will look at you like accounting officer at that moment. You are the leader of that project. So that National Stadium you want to do program, it could be 2 days or 3 days or just 1 day. You now pack food items, uniforms, protective items, toiletries, everything. You pack them together under a canopy. You can see that we don't have a room there. The collection of those items together, they are stores. I hope we are together, everyone. Hello? Hello?
Yes,
we are.
Yes,
Okay.
we are, sir.
Okay, thank you very much. So the totality of those items, any movable item that belong to the government, the collection of those items are called stores. Please check again, chapter 21 financial agreement specify that. So all movable items that belong to the government are referred to as stores. That one is very, very important that we bear it in mind. So that's what financial regulations say. Now, there are classification of stores. We have consumables, expendables, and non-expendables. Consumables, expendables, and non-expendables. Consumables, expendables, and non-expendables. We call them classification by nature because of what they look like. Classification by nature. We also have accounting classification. They call them allocated stores and unallocated stores. Allocated stores, unallocated stores. So let me focus on classification by nature. Classification of stores by nature. I want us to take our mind to our houses. At home, there are some things, when you are using them, the quantity will be reducing. There are some things, when you are using them, the quantity will be depleting, reducing. They call them consumables. Let me give you an example. Your soap, your toilet rolls, your water, your cooking gas, your kerosene or diesel, petrol, gari, rice, yam, any food items, any toiletries, all those things, even your A4 paper, when you are using them, the quantity or size will be going down. They call them consumable items. Consumable items. The second category is called expendables. This category of items, when you are using them, they'll be depreciating faster. They are meant to be used for a short number of time, number of usage. Example is your broom, your brushes, your cutleries like knife, your stapler, your perforator, your calculator. Now, when you give me a calculator as accountant, if you come back next month, you may not like the calculator again. But when you give a doctor a calculator, you will make it new. So that one is not because of passage of time. is as a result of number of usage, number of time you use it. It will make it deplete fast. So all those small tools, small utensils that when you use them, they will be getting depleted faster based on number of use. They call them expendables. Scissors, stapler, perforator, forceps, knife, blade. Now let us look at this. A surgical blade or surgical knife is a consumable in the hospital, but in other places, it's an expendables. Are we together?
Yes, we are.
Okay.
Yes.
Because in the hospital, when they use surgical blade or surgical knife, they throw it away immediately. For one person, they throw it away. But when they use knife in the carton, they use it for 1 year, 2 years, or 6 months, 3 months. In fact, maybe 3 months because of the rate they use it. So they qualify as expendables. But for hospitals, it is consumable. But don't let us go to that level. What we have is whatever you are using and the quantity is reducing, they call them consumable. So the last category is non-expendables. Those are equipment that are meant to be used for years. Like your laptop is expendable. Your motor vehicle, non-expendables. Your motor vehicle is non-expendables. Your generator is non-expendables. And so on and so forth. So that is that. Store document, we have SRV. When you supply something to the government, they issue SRV. When you collect something from the storeroom, they call it SIV. So please help us move to the next slide, please. Next slide.
Hello, sir. Please talk about IPSAS, sir, before you go.
Okay, thank you very much. We talk about IPSAS, but it is restricted to accountant only.
Yes, sir. We are here too. We are on this platform
thank you.
too.
Thank you very much.
Sir.
IPSAS, when you talk about IPSAS, it is IPSAS 12 that talk about. It is IPSAS 12. Sorry. IPSAS 2, IAS 12. IPSAS 2, equivalent of IAS 12. Are we together, please?
Yes.
Yes, sir.
Sorry about that. It's somebody that was calling that cut off the distance. Okay. Are we together, please? Hello?
Yes, we are with you.
Okay,
yes,
thank
sir.
you
We
very
are
much.
together.
Okay. So it is IPSAS 2, IPSAS number 2. I'm trying to oh my god. I can see the screen now. IPSAS 2. When it comes to IPSAS 2, it talks about inventory. So under IPSAS, it is called inventory. Under financial regulation, it is called stores. So under IPSAS, they classify them in certain way under IPSAS, and they measure them in certain way. So when it comes to measurement, they recommend FIFO, first in, first out. Financial regulation also recommended FIFO, first in, first out. And Lagos State Accounting Policy also recommend FIFO. Maybe we should stay on that. But in IPSAS, weighted average is also recommended, weighted average. So, but let's stay on financial regulation and Lagos State Accounting Policy. Is first in, first out. First in, first out is that if you bought one calculator on Monday, another calculator on Tuesday, another calculator on Wednesday. Wednesday is the latest one, and Monday is the oldest calculator. If somebody come to the store to collect calculator, you give the person the oldest one. For example, somebody that is selling roasted plantain or roasted corn, or banana, even raw one, fresh banana. If you want to buy, the person would have put the oldest one he has in stock. You put it on the top. So you issue the oldest item out first. That is called first in, first out. That's the position of of IFSAS on that. Then IFSAS also talk about 4 categories of inventory. Are we there, please? Is that my sister there?
Yes, we are here.
Okay, the 4 categories that IFSAS talk about is IFSAS talk about items that you use to produce other items. Any item that you use to produce any item, to produce your output. For example, you use A4 paper. You don't need A4 paper, you buy it. You buy it because you want to print on it. You don't buy it for A4 paper's sake. So A4 paper is a raw material to you. That is what IFSAS say. Because you are using A4 paper to produce a document. You will see lawyer, they will buy a lot of paper. No, they don't need that paper. It's because the paper will help them to store information and deliver to their clients. So A4 paper is a raw material. In that case, that's the first category according to IFSAS. The second category is item you produce and sell. Item you produce and disburse. For example, in some government organization, they plant in agriculture, they plant, they harvest and they sell. That one is called finished goods. In hospitals, they will buy cartons of gloves, gallons of spirits. You know what they will do? They will now pack them in small and repack everything together. They call it admission pack. What do they call this? A maternity pack, theater pack, something pack. They mix everything. Those pack are their finished product. They sell it to patients. When they admit somebody in most of the government hospitals, they give them one nylon bag, which they are paid for. That is a finished good. But individual item that they bought, those are raw material. The third category, according to IFSA, is work in progress. Items that you are producing, but you have not finished, semi-finished goods. But it's called work in progress in accounting. Sometimes called work in process if you are reading an American textbook. Work in process or work in progress, WIP. Usually we use WIP in Nigeria. Or semi-finished goods. But okay, that's another category. For example, what can we use as an example? If your MD is producing something and they have not completed that project as at the end of the year, those semi-finished goods, they call it work in progress. Okay. The last items are items that you bought or produce for your own use during the period. Let me re-explain everything all over again. Raw material, item you use to deliver another your product. Then we have semi-finished goods. That's work in progress. You have item you finish and you produce, the item you sold during the period. Those are the 4 categories of inventory according to IFSAS 2. IFSAS 2 is equivalent of IS 12 inventory. IS 12. Another thing about IFSAS is disclosure requirement. When you are preparing your financial statement, you give us information about each category. You will notice that today, first working day, some people will come from STO. They will visit all MD. They have deployed all of them today, at worst tomorrow. So that is, they are implementing that aspect of IFSAS. And the main purpose is that the statement of financial position, formerly called balance sheet, the statement of financial position of government should show the true and fair nature of the financial affairs of government as at the last working day. Let us leave that on there. Please, the accountant in the house, my number is on the slide. We can talk more anytime on any of those areas. Anytime, please. Okay.
Thank you, sir.
This slide, the one we have on the screen now, receipts. Sometimes, anytime you
Hello,
collect.
sir.
Hello, I'm with you, sir. I'm with you.
Mrs.
Please,
Adelaja, I want to say something.
Okay.
before you move, sir, please can you differentiate between SIV and SRV?
Thank you very much. God bless you, ma. Thank you very much. I like those questions because there are some things that I will mistakenly skip and they are very important. It's only when we ask questions that we can remember that we have not talked about them. Thank you very much. So the major difference is that one is outgoing, one is incoming. So SRV, receive, that R in the middle is receive, incoming. Somebody is supplying your MDA something. A supplier or a contractor is bringing laptop or raw material or toiletries, consumable. They are bringing something into your MDA. SRV, you are receiving, R for receive. SRV, store receipt voucher. Store receipt voucher. It is the store officer under the control of the accountant that will prepare that one. It's an evidence that government officials have seen what you supplied. SRV. When you supply the government something, government will receive it and issue SRV. That SRV will be attached to the voucher. Any auditor or any person that look at the voucher will know that some people collect money. This is receipt. This SRV means that an independent person is testifying that he has seen that thing, and the internal auditor of the organization will stamp, we make sure he see the SRV. I hope we're together. That's for SRV. SIV, all of us as we are now, most of us have collected something from your storeroom before. You have collected toiletries or liquid soap or air freshener. When you go to collect some, maybe A4 paper, there is a paper you will fill. Your immediate supervisor will sign. You too, you will sign. Then they will pass it to the accounting officer, overall head of the organization. The person will authorize, will approve it. You will now take it to the storeroom to collect something from store officer. That one they call store issue voucher. That paper, it could be an ordinary paper, but it's store issue voucher. It's authorizing release of item from the storeroom. So SIV is outgoing from the store. SRV is incoming into the storeroom. That's the difference. Thank you very much. God bless you for that question.
Okay,
The
sir.
one we are looking at on the screen.
Before we move on, sir, can we now say SIV is the same thing as requisition?
Of course,
Yes.
you are right.
Yes.
It has three names. It has three
Yes.
names. It's the same thing as
Yes.
requisition note. They also call it goods receipt note, GRN. Federal government always use that, and private sector, GRN. So SRV is the same thing as requisition. Thank you very much. What again? So the one we are seeing on the screen is sometimes when there is no receipt, they ask you to supply pure water. Pure water seller don't give receipt. They ask you to buy pure water. Pure water seller don't give receipt. They ask you to do photocopy. Photocopy people don't usually give receipt. But government say that compulsory you must look for receipt. So this paper is called honor certificate. Some people call it certificate of honor. It's still correct. But it has its own limitation. The money must be small. Generally 10,000. In some places they do 20,000, but that is okay. Don't use it for 50,000. Don't use for 30,000. Don't use honor certificate for 100,000. It's not allowed. So it's small amount like 2,000, 1,500, and 200 naira, 10,000. You remember that's change now. When they ask you to do something, that remaining change that you don't want to return, but just look for SR honors and sign and give to them. They will collect it. It's for small amount. So that is that. Okay. So those are the content. So it have date, amount in words, amount in figure, signature of beneficiary, date and name of the description. What do you buy? So that is that. So I want to somebody. Thank you. I've answered the question. I've answered that question. Is SIV the same thing as the question? Yes. Thank you. So now somebody also help me, Mrs. Itunu, Mr. Babarinde. What I want to remember that is delivery pack. When what I call maternity pack is delivery pack. Thank you for that. Okay. So next slide, please. Next slide. Next slide. Oh, payment procedures. We need to have idea about payment procedure. Generally, all payment must be made in check. That is the language of finance. Right? We say that pay people in check, not cash. But to make life easy for everybody, we start using cash. We're doing the two. But remember, if our guy, the accounting officer of your MD, make life easy for you, and the accountant also make life easy for you, the auditor make life easy for you, please don't make life difficult for them. You know why we are saying this? It is very difficult to retire cash than check. Check is easy, very, very easy. Maybe the person, the account name is there now, it's traceable. But cash is not easily traceable. So don't make life easy for them. When you collect cash, please sign and give receipt. Sign and give receipt. Come back and deliver receipt. When people collect money, they run away. If you run away, you don't come to retire your voucher. You want to put the accounting officer into trouble. It is the PS that will receive audit query, not you. So it means that you want to frustrate the accounting officer. And one day you too will become accounting officer. Encourage people to retire voucher. So number two, all check raised must be based on, there must be a voucher before writing of check. The reason is that voucher will show check number, date, and bank name. No advance payment. You will see it is common for people to collect money before they go and buy, collect money before they supply. It is against financial regulation. Those who are allowing it are just making life easy for you. You to make life easy for them, please. The other one, no overdrawn. That one, they say that that one is for accountants. You must make sure that the government account must not go to negative. You must make sure. If it goes to negative, according to Chapter 7, Section 10 of Financial Regulation, that one, they will deduct the interest charges on your salary. That's the law. That's the law. Okay. So the next one, you must record check in a register, check register or check summary register. You must record voucher in a register. That's voucher register. There must be check and pass. Accountant in the house, please. There will check and pass in red biro on the voucher. Check and pass must be done by a separate person, another person different from the. You can't see your own mistake. That is why the system is designed in that way. Give it to another person to check the error. So payment, okay, changing of signatory shall not be delegated. If you want to change signatory to the account, you have to be there physically. You have to be involved. They can't change signatory in your absence. It's not possible. That's chapter 5, chapter 7, section 5 of financial regulation. So the last slide, please. Next slide. Next slide. Last slide. Okay, funds. What is funds? What is fund? Generally speaking, funds mean money. People call it money. But in accounting, for accountants in the house, is a technical term, a broad term. Funds is fiscal and accounting entity in which resources are held for specific purpose governed by special rules. That is why we have revolving fund. It has its own rule. It has its own purpose. That's why we have petroleum development fund. We have pension fund. We have education fund. So if you look at those things, when they say pension fund, does it mean pension money? No. It is pension money plus some other things like pension system, pension scheme, pension law, pension, the whole system together, put together, is what they call pension fund, not only pension money. So funds goes beyond ordinary money. It's a wider term, it's a broad term. But loosely, we can say funds is money. So classification of funds, we have government fund, that is one category. We have fiduciary fund, also called trust fund, fiduciary fund. Then number 3, we have proprietary fund. That's one that deal with government business activities. All government agencies that are commercialized, they are under proprietary fund. So that is that. Oh, accounting unit. There are 3 categories of accounting unit. There are 3 categories of accounting. Don't worry, I promise Mr. Jamil that we will have another session. We have a recap, 2 days to the promotion exam, 2 days or 1 day to promotion exam. We have a recap of everything in a very slow way, in a simpler way.
Thank you, sir.
Okay. So accounting, all government organizations, according to financial regulation, all government organizations are divided into 3. We have self-accounting units, we have sub-self-accounting unit, and we have non-self-accounting unit. Self-accounting unit, sub-self-accounting unit, non-self-accounting. I want to explain them. Self-accounting unit is a government establishment that have control over its accounting records. They can do their payment on their own. They can do receipt on their do voucher on their, they do reconciliation on their own. But the opposite is non-self-accounting. Those ones, they don't have control over their accounting records. So STO make payment on their behalf. STO do receipt on their behalf. STO do voucher and reconciliation on their behalf. That's the extreme opposite. Self-accounting and not. Majority of ministries fall under self-accounting unit. Majority of small projects and units, they fall under non-self-account. Before they can do any payment, it is STO that will do payment for them. If you look around you, you will see that there are some federal government agencies. If they want to pay you, they will say they will go to Abuja. It is from Abuja that they will pay you because they are non-self-accounting unit. Okay? Now, what about the middle one called sub-serve account? Those ones, they have partial control over their accounting unit. Now, for accountants in the house, IFSAS, what does IFSAS say? IFSAS does not recognize self-accounting or non-self-accounting. IFSAS recognize GBE and PSE. All government organizations are classified into two under IFSAS. For accountants only, we have public sector entities. All ministries, they fall under public sector entities. They are referred to those organizations that are non-profit oriented. They are called public sector entities. Public sector entities. PSE, public sector entities. The second category are some organizations that are fully commercialized. They are created for profit making. So, example, printing corporation, water corporation, Ibile Holdings, Ibile Microfinance, Ibile Oil and Gas, all those ones, they are fully commercialized. The only purpose of creating them is to make money for government. The money will now be used to run other organizations of government. Lagos State government has over 150, that me I know, more than 150 MDAs. More than 150 MDAs. Let me explain. If you look at Ministry of Finance, it's like 1, 2, 3, about 15 organizations in one. If you look at, maybe I should just analyze that. If you look at our law, Public Finance Management Law, Ministry of Finance has 3 offices with 3 PS. Ministry of Finance has 3 offices, accountant in the house, please. 3 offices with 3 PS. Office of Accountant General is 1 office with his own PS. The PS is the Accountant General. Debt Management Office is another office. It has its own PS. Remember, in interview, you must know the name of PSO. The third one is Office of Finance. It has its own PS. Our PS, Mr. Odongon, will retire this month. So then Mrs. Don't worry, let's move on. We have 3 PS under Ministry of Finance.
What of OIA?
Oh, sir, OIA is independent. They are not under us. They are independent. OIA reports to the governor of Lagos State. What OIA do is they want to see the secret of everybody and go and tell governor, see, this is what they are doing with your money. So the design is to be independent and not to report to anybody. They don't use PS. It's an office. They report to governor. They just upgraded it. That's the second PS we are going to have. So they are to check what they are doing and report to the governor. So OIA is independent. They are not. They are okay because they are using our building. They are tenants, sir. They are tenants in our house, Ministry of Finance. They are independent. They don't report to us.
They are under Audit Service Commission.
You are correct, ma'am. But they report to the governor, not to Audit Service Commission. Are you with me, ma'am? Hello, ma'am.
Yes.
Hello, ma'am. What I mean is that they still audit the work of Audit Service Commission, Abi. Hello.
No, they didn't. They are under, according to the law, they are under Audit Service Commission.
I understand. I understand what you are saying. I will explain now. If Audit Service Commission has voucher, Mr. Governor give them approval to collect money. They will not collect money if OIA say they won't collect it. Am I right?
You are right.
That is what I'm saying. That there is a way they design those systems. It will look as if you are under somebody, but you are not really under the person. So that let me give you another example. In Health Service Commission, HSE will recruit doctors, nurses, and other medical officers. They will do promotion for them. They are in charge, everything about them, training. But it does not mean that doctor is not under HOS. Do you get what I'm trying to say? It doesn't mean that if HOS asks you to do something, issue a circular, you are not under. Hello, are we together, man? So that's the way they design that system. That's the way that system is. There are many examples like that, a lot of other examples. For example, there are some agency under your ministry, but the head will face Mr. Governor Street if they need anything. There are some MDAs like that. Sir. So that is it. Hello, I'm with you, sir.
Hello, sir.
Hello, I'm with you, sir.
You're saying OIA does not have permanent secretary. Is that OIA?
No, I said
OIA.
No, I didn't say that.
What about Mrs.
They
Daudi?
have. They have. I said they are not.
Okay.
I know her. She's my guy. I've worked with her before. What I'm saying is that OIA is not under Ministry of Finance. They only use that building. They are only using that building. They are not doing any work with Ministry of Finance. They don't have anything together. It's a separate entity and it's meant to be autonomous. So it's not possible for PS Finance to summon PS OIA. That one is not possible. So that is our last lap for today, ladies and gentlemen. Thank you for your patience, and I would like to meet you later. So we now wait for Mr. Jami to fix us, maybe a day before promotion or 2 days. But what I want to beg for is go and look for any question. Let us make a question and answer session so that it will be interactive and we'll be able to cover a lot of things. Any question, please. May I have database of about 1,000 questions is in my book. I also have online, free software online. So you go and look for any question. We meet together that day. If you can have my number, anytime you can send me a question, I'll answer you. So once again, thank you very much, everybody. Thank you very much, Mr. Jamil. Thank you.
Thank you very much, sir.
Thank you very
You're
much,
welcome.
sir. We really
Also,
appreciate
Emily,
it.
you're welcome, man.
Thank you
We
very much.
appreciate
Very
you.
Please
welcome.
pass.
Sir,
Eshe.
Thank you, sir.
Sir,
But sir, there are some
Mr.
questions
Rasul,
on the
sir.
chat box that
Oh,
you
okay.
are yet to attend to. Thank you.
So let me see. I only see one. Wait. Please, if you can help me read one of them. Oh.
Okay. The
I
first
asked
question
one,
I
sir.
asked is that is the SIV the same as requisition form?
I have answered it, ma. I say it's the same thing, ma.
Maybe my network was breaking, so I didn't hear that. Sorry about that, sir.
3 names that the
Rasul,
federal level.
I asked you to kindly go over the 7 lines.
Okay, let me mention them. Before I mention them, I want to say something because of the question somebody asked. What happened was that the 7 lines, standard lines, they are the running cost standard line. We now say that for accountant in there, it doesn't mean that other expenditure doesn't have standard. They also have standard lines. Okay, but it is the running cost 7 standard that are more pronounced. They are 7. Okay, the first one is local travel and transport. Local travel and transport, that's number 1. Number 2, general utility services. General utility service. General utility. Number 3, stationary. Number 3. Number 4, miscellaneous. Number 4, miscellaneous expense. Number 4, miscellaneous. Just miscellaneous. That's what they are calling. That's number 4. Number 5, motor vehicle fuel consumption. Motor vehicle fuel consumption. Motor vehicle fuel. The next one, motor vehicle repair and maintenance. Motor vehicle repair and maintenance. And the last one, maintenance of office building. Maintenance of office building. But for accountants, that is not the order of arrangement, but they are not particular. They won't ask you to arrange it. Nobody will say that. But when you are doing Oracle, it has an arrangement. Transport will come first. Office building will follow. Maintenance of vehicle will follow. Fuel consumption will follow. General utility will be the number 5. Stationary will be number 6. Miscellaneous will be the last one. But don't worry, nobody will trouble you about that too. Nobody will ask you to do that. So, okay, I think I saw another question here.
Is miscellaneous one of them, please?
Yes, last one is the last one.
Okay, miscellaneous. Thank you.
Audit Service Commission is like a civil service commission. Yes, they are in charge of, thank you. They're in charge of recruiting and promotion of auditors statewide. Thank you. Somebody wrote that. Mr. Bolanle Udogon. Why is somebody bearing my August name? Ms. Bolanle Udogon. That's my August name. Okay. Now, this person tell
Mrs.
us.
Bolanle, don't go, not Mr.
Okay, Mrs. Bolanle Udogon. Okay, thank you. Sorry about that. So now, this person is explaining that Audit Service Commission is like Civil Service Commission is a commission. I know that we have about 10 commission. I don't want to waste time on that. I've mentioned Health Service Commission as an example, and the example I did is similar to what she wrote. I said that Health Service Commission is in charge of recruitment, appointment, promotion, and discipline of doctors and other health workers. But that doesn't mean that those officers are not under HOS. Under HOS. So thank you very much. Thank you very much, everybody. Thank you.
Please,
Thank you.
Mr. Rasul.
I'm listening, man. With you, man.
Please, could you kindly go over the 5 M's again? The 5 M's
Oh,
that the
thank you very
accounting
much. Thank you
officer is
very
in
much.
charge of.
If you use the language of financial regulation, it said that accounting officers are the permanent secretaries of ministries and the heads of extra-ministerial entities. It now go further to say that they are in charge of human resources, material resources, financial resources. So we now link it to management. If you link it to management, we now say there are 5 M's of management. The person in charge will be in charge of the 5 M's of management. The number one is men, that's human resources, or you say man. The next one is money, that's financial resources. Machine is the next one, that's logistic equipment, that's man, money, machine. The next one is man, money, machine. Methodologies is the next one, that's procedures. Compliance with financial regulation and public service rule, compliance with business process is part of the primary responsibility of permanent secretaries and other accounting officers. So I've mentioned men, money, machine, methodologies. Then the next one is men, money, material. Men, money, machine, material, and methodology. Men, money, machine, material, and methodology. Those are all the resources of an organization. And the accounting officer will be in charge of these 5 M's of management. Thank you very much.
Thank you very much.
Okay, let me see. I think there's another question. What is the difference between the functions of internal auditor and external auditor? Thank you. Somebody say, what's the difference between internal and external auditor? Internal and external auditor. The difference is that internal auditor is a resident auditor. He is working with us. You see him or her every day. You see your internal auditor as your colleague. You work together as a team. If you have problem, the internal auditor will not fight you. We explain to you, your problem is our problem. We're in it together. That's what internal auditor do. They do appraisal. They make sure the system is working. They make sure everybody is compliant so that we will not face this disgrace with external auditor. External auditors, you may know them, but they don't know you. They will not greet you very well. They may be fighting you. They come only once in a year, end of the year. But because of what we're doing end of the year, they now come early in the following year. So they will start coming in January, February, the external auditor. So the external auditor are called the state auditor. They deploy them annually. So internal auditor will be with you January to December. Another difference is that internal auditor will show the OGA the report and then submit to OIA. OIA, they are staff of OIA. The OIA we talk about. But external auditor are not staff of OIA. They are staff of Auditor General. They don't know you. When they write report, they send it to House of Assembly straight. They send it to House of Assembly. External auditor will audit Accountant General. They will audit the House of Assembly. They will audit schools and hospitals. They will audit all ministries and agencies. That's what external auditors do. Internal auditor, they will sit down where they put them. They will only work in one office, January to December. So that's the difference. I hope I answered the question very well. Do we have any questions?
Okay, so Mr. Rasul, please. So is it safe to say that there are 2 categories of auditors in the public service? Those under OIA and those under Office of Internal Audit and those under Auditor General.
There are more than that, man. There are more than that. Let me give you an example.
There are 3.
There are 3. If you work in a parastatal, they will even ask you to get a private auditor. Those in independent firm, private firm, they will still come and audit you. Despite those 2 that we have mentioned, they will still
come. But those ones are not civil servants. They are not from the.
But they are still auditors.
Service.
They are also auditors.
Mr.
Okay,
Rasul,
you're saying
we have 2 minutes on the call.
Okay.
2 minutes.
Sir, help us schedule another time and date.
I will call you on that, sir.
Okay, then help us tell our people to get questions.
Before I can
What SIV, sir?
SIV, store issue voucher. They use it when they issue item to you as an officer. Any officer that want to collect something, you will feel there is a paper you will fill that your immediate boss, your immediate supervisor will sign. Then the overall accounting officer will also authorize. You now take it to the storeroom to collect. That is what you use to collect stationery, toiletries, air freshener, all those things at the storeroom.
That's the requisition book. Is it the same thing?
Let me explain. See, this requisition book we're talking about, it depends on where you work. It is customized in some places. In some places, it's just plain paper. They will just type the form on that paper. Hello?
The one we have in my office is one that is in duplicate. It's
It
filled
is
in
in
duplicate, and then the accounting
you know,
officer signs, and then you take it to the
you know
store.
what we are going to do. I think in the next session I'll bring sample. This is what happened. In some places they will combine both on the same paper. They will write SIV